gentlemen, K Kim here with the Traders Club. Today, I wanted to do a quick video introducing a special promotion that I'm going to be running this weekend until Sunday late evening. So it will be a special invitation to join Traders Club membership. And if you've been thinking about it, I think this might be a good time to join, as I will be especially inviting you to join with the special promotion rates. And so I want to kind of go over that today in this video. I will do the market update video tomorrow, and I'll go over all the indices and things which we do on a weekly basis, right? So we'll do that tomorrow, but today I want to take time because tomorrow I want to spend more time, analyzing the market. We've seen the market move higher. We had that good consolidation throughout entirety of August. We moved up higher. We saw island reversal. So I'm going to kind of spend time and see where we're going to go tomorrow. But today, I thought I would do the separate video for the promotion today. Again, this promotion will continue until the Sunday late evening. So it will be the 15th of September, late evening there. So you got about 3-4 days to think about it. So let's get to it here. So if you actually go to totradersclub.com, it will pull you to that's number 2 tradersclub.com. It will pull you to this site here. If you just click on the membership right here, and you will see my normal regular page. To go to promotional rate page, you want to click on that. So we'll get to it a little bit, but let's talk about performance, right? First, I want to say that there are so many. It's one thing to call things out, right? It's one thing to say, okay, we're going to bottom in late December. We're going to do this. We're going to do that. It's one thing to act upon your analysis, act upon your conviction, right? And so I think I had the best year in 2017, right? I was able to accumulate 60% year-to-date account gains by the end of 2017. But I think I'm on track this year. I think S&P is gonna do about 25% end of this year, which I've been forecasting since early part of this year. If you guys understand that, if you've been following me since early part of this year, and potentially I could, because I'm almost quadrupling the S&P 500's performance, about 4 times that. I think I can able to get to about 80-90%, potentially 100% gain. This year might be the best year that I'm going to have in my trading career. But again, it's a lot of it because, and I talked about it early part of this year, a lot of it because when we had that fast decline in late December, I held through all of my longs and I bought more very aggressively in early 2000 or this year, this part of this year, right? So when this did that, I started accumulating here, and then you guys remember I started accumulating here, and then I accumulated there, right? And I've been tweeting things out, I've been writing articles here, so you can go back here. Let me go through that here real quick. So this is obviously January 2nd, 2019 is going to be huge, and you can click on this link and and this is where I wrote that article. This is January 2nd, 2019. This is me talking about why I'm going to start accumulating positions, long positions, right? And that was in this area right here. And then this is all these is on my feed at 2KK. This is on June 3rd, 2019. So June 3rd was right here. As you can see, June 3rd. See that? June 3rd. Just write these lows right there. And market usually bounces early or late. It will never bounce in a level where everyone expects. Once the majority of traders and investors want to throw in the towel, that's when the market will reverse. We are getting very, very close. And so I was accumulating longs as well in this vicinity. Again, it's one thing to call things out, and you see a lot of people do it, on Twitter and things like that. But it's another thing to actually act upon those convictions, act upon those calls, actually purchasing or actually buying that dip, right? It's easy to say, okay, we're definitely oversold, this thing going to 300, but do you have enough conviction to really aggressively start accumulating here? I bet there aren't many people who's able to do that and still holding majority of those longs today, right? There may be some people calling things here and there. They probably got out everything in like, a week or two. But I'm holding majority of my positions that I got into back in 2000, late 2018 or early 2019 this year. And I think I started accumulating, most aggressive things I started buying down here was triple shares. I bought triple shares on everything. I mean, SPXL, UDAO, TQQQ, FOS, SOXL, that's a semiconductor triple share. I bought everything. Semiconductor's already up like 90, 100%. I mean, I'm talking about the triple shares. Triple shares, when S&P moves 1% or any of these indices move 1%, those triple shares gonna move 3%. So, it's pretty risky instrument, but if you know the risk versus reward, if you understand, because obviously you guys understand that I was anticipating a V-shaped reversal, which I talked about right here, right? V-shaped reversal prediction at January 5th, 2019. I'll play that clip. And this is live on my YouTube video. This could see a V-shaped higher all the way to 280, potentially even 290s. So saying this could very well V-shape all the way to 290, 300, right? So I came to a conclusion that, and there are many other factors went into this. I'm just showing you what I publicly emphasized or publicly expressed. And obviously one of the things was that this article here and this. And so, and again, it's one thing to call things out on Twitter and social media, but another thing to actually put the money where your mouth is, right? And actually buying that dip. And it wasn't easy to hold 3-year longs and start accumulating more aggressively and riding it all the way down. Again, all those triple shares that I bought in early 2019 and late 2018, I'm holding almost 80% all of those today. And that's what really helped. And then buying this dip and then buying this dip. So I'll show you how I did that. And so obviously this is again June 3rd. We are getting very, very close to reversing, right? And that was right here as I was accumulating more longs, more call options, indices and sectors, and triple shares, and shares also. I have many positions where I accumulate, equity shares, right? You guys know that I've been long on Twitter since 1950, and it's all on my blog. Long on Twitter in 1950. I've been buying the dips ever since. I'm long on Intel since 35. I'm long on Cisco until 30. So when I see dips here, I start to accumulate, right? And then this right here, this was back in August 5th. So it's like about a month ago, right? And this was right there when this thing, you can see that when this thing just kind of pretty much came straight down, right? It was right here, August 5th. You can see that August 5th, right? So that was a day that I talked about gap has been filled and retesting the last level fib. August traders are in panic, and I'm talking about here that what I was doing while the most traders were in fear, right? Late December, traders were calling for a crash. I accumulated. June, traders were in fear. I accumulated, right? So that's right here is a late December, right? Right here's June, and then August. Traders are in panic. I'm looking for more opportunity, which throughout entirety of August here, I've been accumulating, right? And then this is what happened just recently here. So right before it broke out, so you can see I talked about this level here. This gap needs to be filled, right? That gap. And if you've been following my videos and all that, you guys understand we've been tracking this level for quite some time. And August 22nd, right, gapping up above 295 would really jumpstart this to 300. So 295. So what I'm talking about is, obviously, it's right here. There's this gap area right here, right, and gapping up above 295 because there's this gap that needed to be filled that has me acting as a resistance, and then we gapped it up. and we got to 300 pretty quickly there after about entire month of consolidation. If you watch my video, I think last video, there was a step-by-step like video that I was talking about how these gaps were kind of, you know, working out, playing out, and I was explaining how everything happened until we got here, right? So that's kind of what's been going on this entirety of this year. You know, I understood, you know, that we're going to see V-shaped reversal, and I act upon that, and I was able to navigate through these fluctuations, right? And you see a lot of people, you see a lot of these gurus and stuff like that on Twitter, you know, on blog, and what they say, you know, every time there's a little bit of decline, they profess that they're going in cash, right? And this is one of the main reasons why I did really well in 2017, because if you followed anybody back in 2017, this was when everybody was in panic. You guys remember that right here? Everybody said that they're going in cash. Everybody said they were going to have a huge decline. I was accumulating throughout the 2017 summer. And it's all on my blog, all of my videos, you can go check. And then when this thing went vertical, I rolled that all the way up. And that was one of the main reasons why I was able to achieve what I've achieved in 2017. And this was my account gains at the end of 2017 there. So as of today, I just pulled this today. I pulled this today. So it's since yesterday, and today's price action average is going to be reflected on this chart tomorrow. It's usually day late for this. So I'm up 76%, 4 times of the S&P, while the S&P is up 19%. I forecast that S&P is going to be about 25% by the end of this year. And I think I could get close to 90% because I'm pretty loaded up at this point. I've been buying the dip pretty aggressively on these levels, on these pullbacks. Well, I've been closing out some too, so let's go to it here. So that's my performance so far, and that's my account gains, right? That's including the positions that were closed and the positions that they're still open. This is account gains versus S&P 500 year to date, but this is actually realized returns each year. I actually think that realized return is a better way to track your performance because it's not a real gain or real loss until you close them out. So realized return meaning it's only counting the positions that are closed. Positions that are, positions that are still open, it is not counting that. So you can see, I just pulled this up today. I'm up 28% only on the positions that are closed. So you can see how I'm up 20% by realized return standard, but I'm up 76%, probably about 77, 78% today based on account gains. And this is, including all the stocks that are holding. But obviously because, a lot of stocks went up today. I mean, I've been long on that, Apple since the lows, as you can see here, and also calls. And so, but with the realized returns, I was able to beat S&P 500. And even with the late December, like last December, right? Last December, 2018, we saw that 20% decline. They weren't real losses because I was holding. So if I just count only the positions that were closed, I was actually up 18% in late 2018. And I held all of those through the pullback, but I accumulated more on that here, and that's why I was able to achieve the gains that I've achieved today, right? 4 times the S&P, almost 4 times the S&P. So this is also updated today. There were about 100, and this is only tracking the trades that were executed, right? So this is not tracking the positions that are currently open, but only the ones that are executed, right? So it's executed trades win rate, right? From 2016, 17, 18, I did really well in 2017. Obviously, 2017 was a pretty good year for me. 2019, so there were about, I think there were about 110 trades that were executed, and from those, about 75 or 80 of them were winning trades, about 20 was losing trades. So still very, very good ratio there. So if I put on about 10 trade, I'll make about 7 to 8 based. By the time I close them out, I'll make them work. I actually recently made this report, special report for members only. And in this video, it's pretty extensive, fundamental, technical reasons why market is going to thrive on this fear. Right? Market is going to thrive on this fear. I actually believe that this year, 2018-19, fundamentally, technically, and psychologically speaking, I believe that 2018-19 is not as severe versus 2015 and 16. I think 2015 and 16 was more vulnerable technically and fundamentally and psychologically. But do you know what happened afterwards? After that has been clear, market just went vertical. And I think we're going to see something similar next year. And so in this video, and there are, for member area, there's a special report page. There's about 7-8 special report videos that I've been putting it on since early 2016. I can still stand on today. With the analysis that I've done in early 2016, I can still stand on that. And that's why I've been buying the dips ever since in early 2006. Again, it's one thing to call things out, and it's one thing to actually put your money where your mouth is. Actually, you have that firm conviction and you know what I mean, and accumulating stocks in the most severe condition when everybody else scared and running away from it, right? And there was a reversal prediction that back in, I think, January 5th there. You can watch that video here. Again, my target, I wrote the article on January 8th talking about this was back when the market, this was just S&P was just getting back up here. My target price on S&P is 4,000, which I think we can get there maybe by end of next year, right? Apple, same thing. Apple's right now trading close to the all-time highs, right? This was when I was accumulating. And this is market forecast. Again, these are all available publicly. I'm just showing you the public stuff. There are other stuff, the member stuff, but these are all public stuff. This is, we can see these 2016 lows I was talking about. And they're all links right here. You can check them out. And what I was saying back in, when this thing started getting up here, this was when I was closing out my longs and then started buying the VIX calls, those times there. And then when they start coming back down, I made a big video in the article there. Some of the just asset allocation there that I pulled up. And again, this is just all updated today. So you can see mostly heavily invested in large cap. Again, I trade both equity shares, indices, sector calls, and then also triple shares on indices. That's how organized my portfolio is. Again, this is performance, realized return performance. 2017 was so far was my best year in my trading career, but I'm pretty sure that 2019 is going to trump that. I'm probably going to do about 80, 90, possibly 100 by end of this year. And I'll update you guys on it maybe later, but so normally, here, before we get into the price and promotional rate, what I want to talk about is I do get asked, like, what's the difference? So what you see, with these blogs and Twitter, YouTube videos, things like that, what you see is really about 10% of what I do in the market. 10%. You might be thinking, like, what more can you really provide in the member section? It's about 10% what you're going to see. There's so much more going on. This is reasonable. You might be thinking, how can Kay be so brave or so, not fearful when the market comes down like that and able to buy these dips and just work it out perfectly? It's because I understand long-term, the broad market sentiment. the economical sentiment, the fundamental, the technical, and the psychological. And then all of that information is in the member section, which I only share with the member. You know what I mean? And so this is what you really get with these free videos and free tweets and free blogs. Is really you're getting about 10% of what I really do. And I wanted to share a couple things here with you that, you know, that I usually don't share in the public that I shared this week. So something like this was right here. This was when S&P kind of just came down fast, right? From here to here, about 7% decline in about a week or so, just about a week. And there was a massive panic. You know what I mean? Like, just everybody's just trembling, right? And people are saying 1929 Great Depression or 1987 Black Monday. These terms come up every pullback. And so what you don't see, because I've been tweeting things out, you've seen me do that and talking about these things. We're getting very close, and I'm accumulating more, and some of the fib and stuff like that. What you really don't see though, that I don't tweet things out, that I only share with my members. One of them is this. So this one, eventually, this was on that day. This was August. Let's see. This was right. Yeah, it was August 5th. It's right on this day, that day. So this is a chart that I share with my members. Basically, I'm trying to forecast that this is a level that could potentially be a bottom, right? We may come a little lower. We may V-shape, or we may consolidate. I don't know that. But based on the analysis that I've done, and with the past behavior, this is a level that we're gonna see market bottoming, and this is what I was talking about, right? So this is the reason why when I understand a primary term trend of things, then I can be more confident buying these dips versus being scared, and that's kind of what I do for my members, kind of guide them through up and downs, right? So that's one of them. Another one is this one, right? So again, this is only just a couple charts I'm sharing with you. There are probably about 10 or 15 more charts that I share with my members, so I can help them, navigate through these pullbacks. But basically, people started talking about how treasury bond, is soaring, the gold is soaring. Well, that's a recipe for market to crash. But they really do not understand what kind of relationship they have. So if you look at this here, TLT versus Spider. Again, this was when this thing came down here, somewhere about here, like early August, right? So you can see how treasury bond got up here and hit that resistance. And these levels, this is when the S&P, right, saw 20% decline, 15% decline, 20% decline, and then it made new all-time high, new all-time high, new all-time high. This one actually kind of didn't, but that's what I consider higher low, higher low, higher low. And at the same time, treasury bond was peaking. So again, with this, I'm only showing you two. There are about 15 different charts. This is a reason why I can call these things out, guys. I'm not some kind of god or something that I can just see the future. This is a reason why these little pullbacks that we see, or even steep ones in late December, I can call out with confidence because I see these charts, I see my analysis, and I'm confident in my analysis, right? So I'm just showing you two here that I shared with the members. So I talked about this with the oscillators and trying to pinpoint potential level of bottom, right? And I was saying that this is potentially a bottom. We may come down a little lower. We might go up a little higher and come back down. We might even consolidation. Also look at TLT. You see the symmetry of it all, right? So how everything kind of flows, harmonic, right? So you can see, and then TLT was overbought, and that usually happens after decline. And then the market wants to reestablish itself, resume with this primary term uptrend, right? Something I've been saying is that you probably gonna hear people saying that we've been in a bear market, bear market, bear market. They do not understand that term because they look at things on such a short term. We are never in a bear market. I've been emphasizing this. I've been I've been just, shouting top of my lungs since 2016. You guys do not understand what bear market is. We were never in a bear market. This is what you call consolidation. Right? Market goes up, market sees about 15-20% decline, and then market gives you certain hint of what possibly, what it wants to do. Are we stepping towards resuming back up to its primary term uptrend? Or is this decline going to turn into a bear market, right? And so I think that's kind of biggest main thing. So when we see a steep decline, are we seeing a steep decline and this is an opportunity to add more? Or is this going to be a start of a bear market? Well, every bear who said there's going to be a crash since 2012, 13, well, they've been losing everything. And they were missed out at the biggest move ever. And we're about to see another huge move to the upside. And most people are going to miss out on it. And this is why, in those charts you don't see that I share with my members, this is a reason why I can call these things out with confidence, with conviction, and buying those dips. And you see me buy those TQQQ calls, right? I have been buying actually TQQQ calls since the, December lows. And then I bought more on these dips here, on TQQQ, these dips here, and holding them right now. And so I think I cover everything here. So basically this is just regular price. So basically investor doesn't get any option trades, Premier and VIP does. So with the special report, there's a report like this one. And the special report is usually hour and a half, very extensive and comprehensive technical, fundamental, psychological analysis and forecasts and targets and things like that on the big market, the broad market. And all of the membership gets that special report, right? All of that. And so once you watch those special report, and there are many of them, and I always... as my members, if you're scared every time there's a pullback, if there's a decline, watch those special reports, go back here and watch it. It will calm your nerves. You understand the big picture where the market is going. You're not going to be scared. And that's kind of what I try to do with my members. I try to train them to become a better trader so you should able to go through some fluctuations. But look at those as opportunity, right? And then there's a video lesson. So everything I know about how to trade, technical analysis and everything else, there's about 50 videos. I think maybe more, about 50 videos that I've been making for the last couple years. It's all there, all the library is all yours with the membership. And then obviously with the Premier and VIP, you get weekly videos. And on the weekly video, basically you get, every single of my positions, and there are many. I'm going to go through them, every single one of them. Every single one of them. Every single stock that I'm holding, every single option I'm holding, you get all the details and everything. So you get you'll be in sync with me and exactly what I'm thinking about where the market is going. Every week I'll guide you through some up and down shenanigans, right? With investor, you get a monthly video. Since you're an investor, we don't need to look at the market every single week. But doesn't mean that I only give you a monthly video and you're completely neglected. No, you do get market updates, and I do send out charts and analysis throughout the week. So you're going to get at least couple charts, couple analysis throughout the week that you're not, again, some of those charts that you saw here, right? That I'm not going to share in public. There's a reason why I'm not sharing it. Not because I want to be like cheap or I don't want to share it with you. But think about this though, guys. Think about it. If you have a treasure map, right? If you have a treasure map, would you really share it with the world? Right? You know where the treasure is. You know where the gold is. Are you going to write a book about it? Because if you understand where the treasure is, right? Where the paradise is, and you tell the world, nobody's getting there, because everybody's gonna start killing each other to get there. So I'm gonna take small group of people that I work with, and we're gonna go there together. I'll be busy finding my treasure, and I'm not going to share it with the world. I am not gonna jeopardize my, my operation, right? Why should I? This is why, if you're strategy is working, man, you're busy making money. You're not going to start writing books. Just hear me out on this. I mean, everything else are good books out there. But when it comes to making money, right, and strategy, I'm not going to write any books at this point. I'm busy making money. I'm busy working towards that goal. So with the monthly video for investor, you get a monthly video because that's all you need. You're gonna hold stocks. You're gonna have to hold some indices, shares, and some triple shares, and some different, maybe some commodities and things like that. But it's gonna be a long-term goal. And again, invest. You guys know that I'm long Twitter since 1950. Cisco 30s, Intel 35s, and there are so many different ones that I hold, and the investors get all of them. And with the market updates, you would also be connect with me throughout the week. Only difference with the Premier and VIP is that you get real-time alerts with the Premier or VIP, and you get trade setups Premier, right? That's the only difference. So with VIP, you will get right when I'm about to place a trade, you get that alert right then. With Premier, I'll tell you when to go long. I'll tell you, okay, today or tomorrow, this is a good level to go long, and things like that. It's not going to be precise. But one other thing that you're going to get with the VIP is a size, position size, allocation size. So let's say, okay, I'm going to buy 2%. I'm going to have 2% of my portfolio, and I'm going to buy Apple call options, and I'm going to use 2% of my portfolio for that. So you're going to get an allocation size for each position, and that comes with the VIP. But I do have the most members in Premier, so that's the most popular. And so these are the normal prices there, but if you go to here, special promo, again, click on club membership, click on this link here, then it will get you here, right? So you must sign the waiver, read this, and fill this out. Let me know where you found me through YouTube, Google, or maybe one of the members introduce you. Click on that, and there's where you can sign, right? You can sign there. Sign, submit waiver. You cannot start the service without this waiver, so make sure you sign it, and then submit it, and allow about 10 seconds. Make sure it's gonna tell you that it's successfully submitted, and then you come here and you can choose what kind of members you want to get into, monthly or yearly. You can compare the price, and you're gonna get about half off, close to half off with these, for half off there, right? So we got monthly and yearly. Obviously, you're gonna save more with the yearlies. So we got the investors, monthly or yearly, Premier, yearly or monthly or yearly, VIP with the monthly or yearly, right? So there you have it. I'm gonna run this until Sunday late night. So you guys have plenty of time to think about. Come and visit this site here, and if not, that's fine. You can still follow me at 2K Kim on Twitter, YouTube, and I'll continue to share my free content. But you wanna learn more, and you wanna come and trade with me, and you believe that the market is headed for higher. And again, there are many special report compelling analysis that I'm not going to share with the world, that I'm not going to share with the public. Again, when you have the treasure map, I'm not going to share it with the world. And so with the membership, it comes with it. You can come and watch it. And if you're with me on that, then we can both go and let's go after that treasure, right? And I always say to my members that, when you go after treasure, you guys watch movies like National Treasures or these kind of adventurous movie, right? And there are dangers, man. You know what I mean? After you're going after the treasure, but there are dangers. But the reward that comes, nothing in this world, when you're going to go after something great, there's going to be a cost that involved, right? You might get shot at. You might get hurt. You might fall down. Maybe there's a lion in front of you. There's something's going to happen. You know what I mean? And I'm not going to say if you just sign up and everything's going to be just perfect and great. No. We're going to have to work together. There's going to be dangers. But you know what? If you have a passion for this game and you realize that, this is something that you want to do, despite there could be dangers, and because this is not for somebody, and I tweet this out all the time. you know, the weak, the fearful ones are always gonna get bullied by the market, right? And so if you're serious about that, and if you're serious about, you know, doing this in the market with me, feel free to come, you know, trade with me, sign up these memberships. If you have any other questions, you can always feel free to email me, but come check this out. And tomorrow I will go ahead and do the market update tomorrow. Again, this promotion will go until Sunday late evening, and then we'll go back to the regular price there. So, all right, you guys have a wonderful evening, and talk to you tomorrow for the market update.